was very successful, but he just cannot get past his own biases and his own thinking to understand this new technology, which is Bitcoin. And the best he can do is compare it to gold. But if you really wanted to compare Bitcoin to gold, then you should do a fair comparison, right? So he's saying that Bitcoin lacks privacy. And that is true if you're buying Bitcoin from an exchange. So let's just take the analogy that Bitcoin is gold.
If you found this helpful, please like, subscribe, and turn on notifications for more insights into the digital asset space. Your support boosts the algorithm and helps this channel grow immensely. Drop your thoughts in the comments below. Thanks for watching and enjoy the rest of the video. Samson Mow begins with a controversial but central argument. Many critics of Bitcoin fail to understand it because they are intellectually anchored to older financial paradigms. Referring indirectly to figures like Ray Dalio, Mow suggests that some highly successful investors built their worldview during an era dominated by fiat currencies, central banking, and traditional assets such as gold. According to Mow, this creates a cognitive barrier. He compares it to an evolutionary limitation where older generations struggle to adapt to fundamentally new systems and technologies. In his view, Bitcoin is not simply another asset class, it is an entirely new monetary architecture. Therefore, applying old frameworks to Bitcoin inevitably leads to flawed conclusions. He argues that many public commentators recycle the same talking points from podcasts and media appearances without deeply understanding how Bitcoin actually works. As a result, misconceptions continue spreading across financial circles. Mow believes this explains why Bitcoin is often compared only to gold instead of being recognized as a superior digital monetary network with unique properties.
Well, people that think Bitcoin has no privacy and it's a tech stock, we call them poor. So that's kind of the underlying current here. But, I used to wonder when I was a kid, why do we get old? Why do we die? And questions like that. But as I've gotten older, I've kind of realized it's sort of an evolutionary defense mechanism that, once you reach a certain age, you cannot adapt, you cannot learn new things, you cannot understand new concepts. And I think Dalio is kind of the emblem of that he's from a past time, was very successful, but he just cannot get past his own biases and his own thinking to understand this new technology, which is Bitcoin. And the best he can do is compare it to gold. But if you really wanted to compare Bitcoin to gold, then you should do a fair comparison, right? So he's saying that Bitcoin lacks privacy. And that is true if you're buying Bitcoin from an exchange. So let's just take the analogy that Bitcoin is gold. You have a vein of gold, I don't know, pick some place, Arizona, some California, where there's a gold rush. And you have some gold miners that are mining the gold, and they set up a little store next to the river. And you go to them and you buy the gold from them. And in the process of buying the gold, you give them all your information. You tell them your address, your phone number, your photo ID. You give that to them too. You tell them, your age, height, weight, and everything. And then you expect that you have privacy. And that's just not the way it works. But if you went and you mined the gold or you found the gold yourself, then nobody knows that. So I just don't understand why it's so difficult to understand this, or they're just blindly repeating things that they've heard online somewhere. The other thing he said was people can stop you from transacting it. And I think he's mixing up a few things there. You can have addresses that are blacklisted, but I don't think any Bitcoin that has been blacklisted or any Bitcoin that has been theoretically denied movement has ever been stopped movement, because someone just makes that transaction and some miner somewhere, some BitAxe will just mine it and it'll move. And that's it. So in theory, yes. In practice, no. And I think that's the biggest problem with a lot of these critics of Bitcoin. They lack the fundamental understanding of how Bitcoin works, how the network works. Yes, definitely we are very early, and all indicators show that we are still early. Even if you watch that clip, they're talking about, gold outperformed Bitcoin in the same time period in the last, several months. And it just shows that not only are we early, but everybody is very high time preference. There's nobody that's really low time frames out there other than the plebs, like they're looking at these short time frames and making these comparisons and making decisions based on these comparisons. But I think the fundamental issue is two things. They're just watching other influencer podcasts. Like I hear a lot of Chamath in what Dalio is saying. He's watching Chamath, like they're just recycling the same content because they're just going on podcasts and then listening to what the other guy says and then they're repeating it. And unfortunately, it's untrue. But the other underlying symptom, as I said, is they're just unable to understand Bitcoin. And there's another good example of this cognitive block. So there's this class of math problems called the Erdős problems, and they've been unsolved for 60 years. And all of a sudden, some kids with AI and GPTs, they're coming along and solving these problems. And there was one mathematician that theorized what happened? Like, is AI that good? And his theory was that it's just that human mathematicians always took a wrong turn at the very start of solving the problem. And then they just got the wrong answer at the end. So I think it's very similar for Bitcoin. They're just taking the wrong turn at the very beginning and they're unable to solve it. But again, like this is why, the older generation has to leave, because it's the younger generation that can understand it and figure it out and move on. Sure. I think you had Prince Philip on last week and he alluded to this, but we launched Agentic Aqua, which is an agentic version of the Aqua wallet that everyone loves. So it's the liquid wallet, Lightning support, and stablecoins all in one, but now packaged up for AI agents. And it's a good segue because it's directly related to what we're talking about, that the older generation can't seem to understand it. And I'm curious if they really understand the impact that AI will have. But from my perspective, AI changes everything, like how you will transact, your ability to have your agents transact, or even just free-flowing agents' ability to transact. And I think Bitcoin and these and stablecoins are definitely a part of that mix there, where an agent cannot really get a credit card or a bank account, but they can create an Aqua wallet, because now we built this toolkit called Agentic Aqua. So your agent can now get Bitcoin, receive Lightning payments, swap to stablecoins very soon, and make these transactions all by itself. So it's a whole new ball game out there where people have said it before, but the expectation is that there will be billions, if not trillions, of AI agents transacting. So there will be more transaction volume coming from these autonomous workers that are coming from humans. So you have to plan for that future. And I think there's a lot to play around with, a lot to discover. So yesterday we were talking on a call and we're discussing like how would you get a JAN3 account, which is a JAN3 account is a account in Aqua that will link you to other services that you want to bind, like a card, debit card, Visa card, or potentially other things too. And right now we have a CAPTCHA to make you go through as a human to make sure you're not a bot. But the world has changed, so now we do want bots to pass the CAPTCHA to create an account to bind it to other services. So we're just talking about just letting the AI pay for it, right? So the point of the CAPTCHA is to block spam so you don't get DDoSed. But if they're paying for it, then you go back to kind of the hash cash argument. It's just proof of work, energy, money, and then you let them through. So we're planning to probably let AI agents create the JAN3 account. So instead of seeing a CAPTCHA, they will just pay a little bit of sats and get their JAN3 account and then bind it to other services. So money is now your proof of existence. It doesn't matter if you're human or bot.
One of the major criticisms addressed in the discussion is the claim that Bitcoin lacks privacy. Mow acknowledges that Bitcoin transactions on public exchanges are highly traceable because users voluntarily submit personal information through Know Your Customer (KYC) regulations. However, he argues that critics confuse regulated exchange activity with the Bitcoin protocol itself. To illustrate the point, he uses a gold analogy. Imagine buying gold from a regulated dealer while providing your identification, address, and personal details. Naturally, your ownership becomes traceable. But if someone independently mined or discovered gold themselves, there would be far more privacy. According to Mow, the same principle applies to Bitcoin. The issue is not the protocol, but the centralized systems surrounding it. He emphasizes that Bitcoin users still have options for self-custody, peer-to-peer transactions, and privacy-enhancing practices. Therefore, saying Bitcoin has no privacy oversimplifies the reality and demonstrates a misunderstanding of how the ecosystem functions.
Well, I would agree that they're going to all need it. And unfortunately, it seems like nation states like to learn through experience rather than through the personal experience rather than experience of others. So it's almost like they need to be deplatformed or debanked or cut off from the SWIFT system before they realize that, well, yeah, it was not a good idea to have all our money in some other central bank somewhere else, right? Because all fiat currencies live in some central bank somewhere, right? It's not like you have physical cash in the billions and trillions that are shipped around on pallets. They're just sitting in central banks, and you, as central bank of the country of Walkerstan, have an IOU with the other central bank, right? So they will understand in time, but it's almost like there's no foresight, there's no planning, and it's reactionary. And I can see why that is the case, because most countries are broke, right? They are in debt. So they don't really have funds to deploy to buy scarce assets. Like some do, but generally speaking, most countries are in debt. So it's a difficult sell to tell your population, we're going to go and buy some Bitcoin, because you have people that question the validity of Bitcoin as a one objection. And the second is, well, why are you doing that instead of building roads, right? Like, why are you spending money? And I think this is why it was difficult for the US to really start the SBR and codify it and go into non-budget neutral acquisition. And they had this focus on this thing about budget neutral. We'll acquire, but it's not spending money, because when everyone's poor and they're suffering from inflation, it's a very, very hard sell to say we're going to go and buy something, right? Even Canada, the government here is trying to create a sovereign wealth fund with no wealth. So it's more of a debt fund. They're borrowing from people to invest in projects. So it's a difficult thing. Like people just have to learn, governments have to learn, and it's the same all around, that you want a neutral bearer asset that you can move yourself. And definitely people like Dalio saying it can't be moved because someone can block it does not help the case on any level. I would say I sit on the bullish side of it. Yeah, Warsh is a mixed bag. Like, he said a lot of interesting things. He's obviously pro Bitcoin. He's also, I think, disclosed to have invested in some DeFi and crypto projects. So he's not a pure Bitcoin maximalist, but that's difficult to get. He's anti-CBDC, which is a check mark in the right column for sure. And he's kind of hawkish, right? He wants to keep rates high, and he doesn't believe in easy money and QE and all that. Whereas Bitcoin has historically thrived in that, easy money environment. So it's difficult to say exactly what will happen, but I think he's a favorable pick. I'll definitely miss Jay Powell, and I'm glad that he can focus just on Kraken now and not to do two things at once. But yeah, I would say these are interesting times to have a potential Fed chair that is pro Bitcoin, and it's not yet certain that high rates will be punitive for Bitcoin, because rates have been high for quite some time, and Bitcoin has been doing quite well. I mean, some people, the more bearish ones, are obviously going to say, we're down 25% or 30% or whatever. But I would say Bitcoin has fared incredibly well during these times of high rates, and if anything, it is serving as that indicator that hard assets are in demand, and it's driving capital to harder assets, as we've seen with metals and with Bitcoin, right? Not to the same extent as the metals, but I believe that is yet to come. Yeah, I would say so. And there are other factors at play here too. So when rates are high, then stablecoin issuers like Tether are, having record profits, and they're reinvesting those profits into the Bitcoin ecosystem, into Bitcoin technology, and buying Bitcoin outright. So, all roads really lead to Bitcoin. High, low, it's all good for Bitcoin at the end of the day. Even you could look at STRC from Strategy as another indicator too. Like, it's doing quite well, and it's at 11.5% now. Maybe it'll go more it'll go higher. But like if rates dropped, it would be better for them, right? Because then they'll be paying more. But even with rates high, they're still highly competitive, and it's an incredibly, incredibly successful product that is really the iPhone moment for a strategy. So I've said it time and time again on podcasts. I don't really believe in cycles. Sometimes I'll slip and say cycle by accident, but that's just habit, right? But I don't believe the halving has an impact anymore. And it's questionable if it ever had an impact, because the business cycle and the election cycles also lined up with the 4-year marks, right? But definitely, if you're a cycle purist, then you should see that we didn't follow the cycle. We had a new all-time high before the halving, and we're down. But I think the most important thing is not money supply. It's not the business cycle. It's about what is really happening in the world. And what is really happening in the world now is we're seeing massive amounts of adoption. We're seeing nation states buying Bitcoin. We're seeing central banks acquiring Bitcoin, the Czech central bank. We have Strategy now, which is kind of a monster, and it's devouring Bitcoin at an unprecedented scale. I think they are probably on average multiple times the daily mine supply if you average it out. And then you have other treasury companies too, like Metaplanet, Strive, BSTR from Adam Back is coming soon. And I just don't see the market being able to sustain all this demand, not to mention the ETFs. And if you go back, my thesis for $1 million Bitcoin was the ETFs, that they unlock the floodgates of capital to enter, because it's sort of like a TradFi L2. There's no blocker for your brokerage to buy Bitcoin, right? They're aggregating demand, whereas historically every bull run was kind of muted, either through Coinbase going down, or it was because the exchanges were bottlenecked and they couldn't onboard people fast enough. But that's because it was a retail-driven market. But the market is just radically different now. And also the unit bias is radically different now too. People are buying Bitcoin at $40, 40 something dollars, or 60 something dollars, right? They're buying IBIT, they're buying FBTC. They don't know necessarily that Bitcoin is at 70, 80K or 100K or 126K. But you put all of that together, and it is just, you're on another planet now, and it's like a Bitcoin planet. And Saylor said it, I've said it too, but the treasury companies, they will buy at any price. So if you're not in a rush to sell, you don't need to sell at 80. You don't need to sell at 100. They'll buy from you at 200. They'll buy from you at 300. They'll buy from you at 1 million or 10 million. So you can't really net that out with business cycles and money supply and interest rates. It's just too radically different.
One of the most forward-looking sections of the discussion focuses on artificial intelligence and autonomous financial systems. Mow introduces Agentic Aqua, an AI-compatible version of the Aqua wallet that allows autonomous AI agents to transact using Bitcoin, Lightning payments, and stablecoins. This concept represents a dramatic shift in thinking. Traditionally, financial systems are designed for human users who can open bank accounts, apply for credit cards, and verify their identity. AI agents, however, cannot easily participate in legacy banking infrastructure. Bitcoin changes this dynamic. According to Mow, AI agents can independently create wallets, receive payments, send transactions, and interact economically without relying on traditional banking systems. This creates the possibility of billions, or even trillions, of autonomous AI agents transacting continuously across the internet. He argues that future transaction volume may eventually come more from machines than humans. This vision radically expands Bitcoin's potential use case beyond human finance into machine-to-machine commerce. In Mow's view, Bitcoin becomes the native financial layer for the AI